Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So just thought I'd show you, here's what the seasonal chart looks like. What did it do this year? Is it respecting the seasonal tendencies right now in this crazy environment? I mean, after all, we have, all this stuff going on around the world. We're debating whether we're still in recession, coming out of recession, whether the banks, TARP, the dollar. I mean, we could go on. The borrowing, the Fed, interest rate differentials, where interest rates are here versus abroad. What's the economic conditions in Europe versus U.S.? What are the economic conditions here versus Britain? What are the monetary flows between Britain and Asia? There are several different cross and current flows of money going around the world, folks. That's what's added to the volatility. And then through all of that, I can say simply, hey, guess what? So far, the seasonalities of the market of past history is conforming to current market conditions. So until it stops working, I'm going to continue to use it on my side with confirming technical tools, such as if we are bearish, I'm going to be looking at taking sell signals, and I'm going to be looking against selling resistance. What you're looking at, all these dots, this is not, and I repeat, this is not a Bollinger Band. These are predictive in nature. In other words, at the end of this day, it told us what the next day potential high and low would be. And I'll tell you what, more times than not, as you can see, it accurately gives us what the potential range is in trending market conditions, what the actual low is, and that's one of the things that can help us. So combined with, and that's how I develop my trading skills, is that I use specific tools that are outside the box that not everyone else is using. So with that said, I hope that in today's presentation, you've been able to get something out of A, looking at price to moving average relationships, a little bit more education or insight in that. B, look at a great product from ISE, International Securities Exchange, Pound Index, and look at seasonalities, and also included how we can develop together using pivots as a powerful tool in not only giving us what the next time frame's market conditions should be, bullish or bearish, but under those conditions, show me what the potential range might be. Now, if you're interested and you want to go to our website, please feel free to visit at nationalfutures.com. And as a special to today's presentation, we have, if you want to learn more about moving average formulas and a strategy guide, we have available to you. Please send an email to info@nationalfutures.com. In the subject line, just put in IS in the subject line. Put ISE Seminar. I'm sorry about this. I'm writing with a mouse. This hurts. ISE Seminar. If you put that in the subject line and then type a message, please send me a copy of the PDF booklet on moving average formula and strategy guide. Thank you. We will send you that PDF copy free of charge, of course. That concludes our time together. I hope you found this a valuable and educational format. Thank you very much. And I hope everyone, this improves the way you look at markets and trading. Appreciate your time, and I appreciate the ISE for allowing me to come in and help to educate you traders on their products and their services through, again, the ISE.
John,
now,
thanks.
Steve, I pass the baton back to you, sir.
Thank you. Do you have time for a couple questions?
Absolutely.
Okay. First of all, I want to say thank you. Just want to just let everyone know that I saw John present. We presented jointly in Las Vegas. I think it was last fall. Gave
November.
a similar presentation. I can't remember which currency, but
Euro currency.
you went through. Which one was it?
Euro currency.
Euro, and You know what? John was right on with the seasonality on that one also. That was last fall. I can't remember which way was.
Euro currency bottoms out third week of October, rallies into the end of the year.
This year, obviously, it went a lot further than probably anybody would have thought, because the dollar was going to surge. I'm sorry, or the euro currency. I'm sorry.
It was the dollar. We were looking for the euro to go up against the dollar to go down against the euro.
Gotcha. So you had a nice run there. And John,
incredible run, yes, Steve. It was beyond our wildest dreams.
John has done studies, at least that I haven't seen anybody else doing these seasonality studies. If you're interested, go to nationalfutures.com. I find it fascinating. I wrote a couple notes to myself, because not only when you're looking at the dollar against the British pound, but you know what? If you're trading British stocks, you're trading them in U.S. dollars. So they're going to look different, even though a lot of us probably are not used to that. So if the dollar strengthens, that's one thing, and the dollar's weakening. If you have your money in British stocks, obviously it's in the British pound, and at least in that relationship, it would look, your investments will weaken as the pound weakens, and it'll strengthen as the pound strengthens. So you may want to consider some of the things and learn more about it. So go to nationalfutures.com. John, let me see if I can find a couple of questions here. I found your presentation to be.
Someone said that they're confused about the pivots. These are actually, if you look right here, if I could, on this slide, it says person pivots, and they say day. This is a daily chart, Steve, and these are calculated daily support and resistance, okay? Every day. These are daily charts. So I believe, because we were running out of time, you look at this from 5/11 to 5/18, these are not monthly pivots. These are weekly. That's 1 week. This is another week. Count up the dots. 1, 2, 3, 4, 5. Next week, 1, 2, 3, 4. This was a shortened week because of Memorial Day. So that's what you were looking at for that person who asked that question. I apologize, because I had mentioned that we would show monthly, and I think we cut that slide out to allow time for today's presentation, Steve.
Gotcha. Sorry, John.
No, my apologies to your audience, Steve.
Question about, are your pivots less accurate for trading equities than indexes, or will they really work for any market?
Well, I tell you what, go show a chart on Apple, and I think you'll really get your head knocked in, and as well as Google and a lot of other stocks. I think low volume and narrow range stocks, to me, is one thing. First off, I think that when I teach using multiple time frames, and I use pivots, as I've mentioned several times today, folks, that I use the pivots in a special formula that I developed to help give me what the market condition is, and then under that condition, show me what the potential range is. I use that for monthly and weekly time frames as well as daily. For me, I like to look at the higher degree time frames first and then drop it down to weekly and daily. So the answer is yes, no, they work very effective in equities. In fact, the weekly projected high in Apple was 146.88. So far for the week, you'll see, or that was last week's price prediction, by the way, and you'll see that was exactly, we just tapped a little bit of that resistance, and the market sold off since. So I think you'll find using the longer-term pivots very effective for equity trading, especially for swing and position traders. Next question, Steve.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.